Good morning, and thank you very much for being with us this morning. And thank you, gentlemen, for sparing your time and being with us at this very important event, just a few days after what is being talked about as a fiscally prudent, feel good, and pre-election year budget in that sense. So, without much ado, what I will do is I will start off with a broad question to all of you on the broad contours of what you think are the big salient features of this budget in your sense, and then we will come down to various aspects of that. So, I'll start with you, Mr. Ananth. What is your sense of how this budget has gone? What are the highlights to you in your mind of what the minister has done?
Uh, you know, when is this on? Yeah. Whenever we look at a budget, we tend to often have expectations which are very different from what is really feasible in any budget exercise. If you look at the budget and you look at the details of it, you'll find that in effect, the degrees of freedom available to any finance minister to actually make changes is very small because a large part of expenditure is in any case pre-committed. Uh, Interest payments, salaries, and the ongoing inertia of past projects which have to be continued to be funded, the actual scope for making changes is small. Keeping that in mind, the fact that this was an election year, budget for all practical purposes, the government has done a remarkable job in not giving into a variety of temptations which could have been there. Uh, the fiscal deficit target has been kept in check, and along the lines of what had been laid out after the COVID crisis hit us, and therefore, government has not, so to speak, broken the bank there. They have retained the push on infrastructure which had been started also during the, in fact, even before COVID, the push toward building infrastructure has been there. They have maintained that because, in a sense, that is the likely returns for that will come over a much longer period. So, given all of this, this budget is actually probably one of the most progressive budgets we've seen in a very long time, because the expectation which a lot of us had, or the fear which a lot of us had, is the election this year itself is a mini general election with 9 states coming to
That's right.
elections in the course of the year, with the full election coming next year, that there'll be a temptation to put some of the long term efforts on the side and go for certain short term gains. That has not been done. So that would be my bottom line from this budget.
So clearly, the big takeaway is that the government has chosen not to be populist overtly
That's
in
correct.
this budget. Shoma, what is your sense of what would be the key takeaway? What if you were to talk about one or two key points? What would that be?
Yeah, thank you. See, in terms of, I will just put down four bullet points which actually sums up the budget in terms of numbers. First is, if you look into the capital expenditure as a percentage of GDP, that is now at 17-year high. If you look into revenue deficit as a percentage of fiscal deficit, that is now at a 14-year low. As you know, that fiscal deficit could have a revenue deficit, capital expenditure component. It is now at 14-year low. If you look into the subsidy component, during the pandemic, it had touched 3.6%. We have now brought it down to 1.3%. And petroleum subsidy today is the lowest since FY 2004. It's actually a 19-year low. And a large part of that incremental money actually is going to build up the PLI scheme, which is 1% of GDP. And finally, the most important thing, which in economic parlance we call it the tax buoyancy. That means tax buoyancy, if you look into the history from 1970 onwards, till date, 2020 till 2023, the tax buoyancy was at record high of 1.5. India was the only country which had witnessed an increase in tax revenue during the pandemic. And this year, the tax revenue buoyancy numbers are actually pegged conservatively at 1. So, overall, the budget actually has a clear orientation of moving towards an era of increased capital expenditure, creation of more assets, and trying to move away from the over reliance of revenue expenditure and subsidy payments. So I think that is the grasp.
Abheek, the question to ask then is, as Shomo said, that it's a clearly a big push and continuingly so over the last couple of years on capital expenditure, government capital expenditure. Now, the question some sections may be asking is that is there enough absorptive capacity in the economy in terms of whether this 10 lakh crore can be actually implemented in time?
Well, actually, that was exactly the point I was going to raise, because we just heard a minister whose ministry has been absolutely fabulous in absorbing funds allocated. But I'm not too sure. I mean, I think the efficiency of absorption has improved across ministries, but that remains a question. You can allocate a lot of funds,
Yes.
but both at the central and the state level, and particularly with the state level, with the myriad sort of uncertainties that states face, absorption might be an issue. So that is something one can't just turn a blind eye to. And railway and roads is not really a representative
That's
sector
right.
for that matter. And I think roads has been conflated with infrastructure so much that India's infrastructure story has really been a road story. So I just hope with the allocations and the push that the government is providing towards, reviving investments in infrastructure and bringing about a revival in what we sort of call the capex cycle, when the private sector is unlikely to participate too much because of the uncertainties related to the global slowdown and so forth. I just hope that the absorption capacity improves. One encouraging sign is the fact that I think after sitting on their haunches for a period, the states have actually started spending over the last 4 or 5 months on investment projects, and this takes me back to what TCA was saying, is that I think there's a conscious effort by this government to change sort of the political economy narrative, away from this time-tested form. Well, I don't know whether it's sort of passed the test, but this formula of throwing money at the electorate before the elections, to just saying that, look, I mean, this is a very irresponsible thing to do. So the move towards getting away from reveries and getting to sort of hard economics.
And that has been a constant refrain from the government that you should move away from that.
Yes. And so I think, given the absence of that, I think states would have the incentive to use economic performance as a vote catcher. I just hope that sort of pans out.
Mr. Chand, as the government's think tank, I mean, how do you see this whole question of absorptive capacity, given the fact that obviously from the government's and from the budget side, the push is towards capital expenditure in the hope that private sector investment would be crowding in, but that's not really happening, is it?
You see, the budget and other policies of the government do not talk only of resource allocation. There is lot of talk of ease of doing business. There is lot of talk of reforms in governance. When ease in business happen, reform in governance happens, and when we are able to address the issues raised by court, which are becoming obstacle in the way of several investment, you just find that the absorptive capacity improves considerably. So you find in the budget that it took cognizance of those aspects, absorptive capacity, and there is attention paid to those kind of things. I see that one of the reasons for unexpected, but some people feel unexpected allocation for capital outlay is that sometimes you have to derive changes in a particular direction. So as many analysts have already mentioned that this budget, you see the signal of making India Viksit Bharat, you see signal of doing things in Amrit Kal. So if we have those kind of transformational goals, then I think we have to just see to it that we do things in a somewhat different manners. So I would say that this is a bold decision of the government that it talk of complementarity between public outlay and private outlay. And we have seen in many sectors that when private sector capital formation happen, you find there is a big increase in the private sector capital investment also. But the term crowd in is, I think, slightly new.
Too
The
optimistic.
literature talk about complementarity between two type of investment.
No, Professor Ananth, to take off from what Mr. Chand is saying, there is this whole thinking about, he doesn't like the word crowding in, but in a scenario where global headwinds are, global interest rates, global headwinds, inflationary tendencies, no real, no, industrialists are not really willing to cut large checks in terms of investments. Do you think the expectation of private sector really coming in and following this large capex investment is going to happen?
There are two types of effects which the infrastructure will have. Private sector investment, and particularly large ticket investment, is not so easy to predict. Uh, there are a number of elements which come into play. One of them is how do they perceive their own market and demand? What is the extent of overhang they have from the past? What is their own capacity to invest in terms of their own obligations and debt and all of those? So the large private sector, there are many issues which will need to be resolved. There are some signals that some of them have started thinking of big ticket projects. Some of them are facing capacity constraints, so they will probably start taking up investments. But there is also another level at which investment and activity picks up. One of the things which has happened is the improvement in infrastructure, both road and rail, creates a lot of complementary activity in the small and now these in terms of cumulative effect, we don't really capture it very well in the data, and sometimes the figures are shown up with a lag. My sense is the effect will be much more in this segment because improved connectivity does increase economic activity, and a lot of small scale economic activity is likely to see a revival. The COVID shutdown had seen many of these people in trouble, but as the economy picks up, it's probably this area which you will see a lot of growth in.
Shomo, let's talk a little bit about growth, the growth figures which have been recently put out, both by the IMF as well as by the government itself. Now, 6.5% baseline, what the economic survey talks about. Do you think that is possible in FY24, and why do you feel that way?
Thank you. I think, 6.5% growth rate, I think this year the forecasts are actually widely varying. Some forecasts are below 6%, some are more than 6%, and as per the economic survey projections, the number is between 6 to 6.8%. So if I take the midpoint, it's around 6.4 to 6.5. See, the reason why I'm a little optimistic about growth this time, and there could be a positive surprise. Difficult to say the exact numbers, but my sense is that next year there is a lot of factors which could be actually growth accretive. For example, I think the commodity price cycle has already, is going to turn better, is already turning better. Crude oil prices is going to turn better as the economy is, as the US economy is poised for a soft landing instead of a hard landing. And the third important thing is that Indian exports, I'll give you one data. Last year, exports, and this basically is the most important point. Exports and goods and services last year was around 670 billion, 420 billion exports and 250 services. This year, till November, the goods and services exports are growing at 16% per year. So by that logic, it should be close to 800 billion this year. So the talks about an exports actually dragging down growth. has been talked about, but as of now the data doesn't portend. And if you actually look into Indian export basket, you will see that a large part of Indian exports are now becoming business cycle agnostic. That means
That's
they are
right.
not moving in sync with what if the US economy is doing badly, they may not do badly. They may in fact do better. So that's the advantage of having a diversification. So having said all these things, and finally the important point is that in terms of the credit growth, we are saying we can discuss it if you have time. I think a large part of the
Yes.
credit growth is now being contributed by the MSC sector, the SME sector. Basically, 10% of the overall credit growth is contributed by the MSME sector. So I think these are some of the factors which may be working
Do you
under the
think this
carpet.
MSME credit growth, do you think it is essentially because of the kind of focused effort which has
Yes,
happened?
focused efforts the government has given in terms of the credit link guarantee scheme. The government has recently launched an initiative on the Uddam portal, which has been till date a resounding success, and that wants to bring all the MSME under one platform,
Right.
so that all the data is with the banks, and the banks, then everybody can give them the loan at fingertips. So I think these are some of the things the government has been doing very, strongly. My sense is that if these factors play out, I think we registered 28.5 crores unorganized workers on the e-Shram portal within a span of 4 to 5 months. So that is the rate if we are looking into. I think these are positive things. Hopefully, that could be growth accretive in the next fiscal
So what's
year.
your best sense of the figure?
I think
Any guesses?
it could be, 6.2, difficult to put a number, but I'll not be surprised if it's closer to the median rate than what we are expecting as of today.
Abheek, your sense of where the growth figure might lie?
I think it's all very uncertain because although there are signs that the US could have a soft landing and China is going to sort of roar again, there are risks as well. And it is possible, given the persistence of inflation and this, game of chicken that the markets are playing with central banks, that the central banks, in order to kind of reassert their dominance and win this game of chicken, could sort of actually overdo the interest rate hike bit. So who knows? I mean, a lot of today's projections are premised on the Fed stopping at 5% or less. If it goes up to 5.5%, what happens? So I think it is a world, we are looking 2023 is going to be a very sort of, there are uncertain times ahead and we should be prepared for it. And the best way to do it, as indeed the chief economic advisor has done, is to provide scenarios and a band rather than trying to put a point forecast. And I think what is important is that how is it being used? So if you look at the budget assumptions, I think it is very conservative. So if you look at the nominal GDP growth, which is really important for the budget, it's at 10.5%.
Yeah.
So you can't go much below that. So I would say, if you ask me for a number, it's around 6%, and there is possibly some upside to the 6.5 to the 10.5% nominal GDP number because of some of the factors that Shomo mentioned, commodity prices picking up and so forth. But I think the global economy still looks kind of uncertain.
Mr. Chand, your sense, because this whole nominal growth projection of 10.5, is it realistic, you think?
The budget mentioned that after 1920, the capital outlay last 3 years has increased by 33% every year. So if capital outlay is increasing at that rate, there is always a lag effect that
Yes.
with the capital investment, you will have growth with lag of 1 year, 2 years and 3 years. I think we will see the impact of that investment, which has particularly public investment of last 3 years getting translated into output and production, especially in the case of infrastructure and in the case of manufacturing sector. You see, we have a big scope for growth of manufacturing. We know that manufacturing growth has been quite low compared to potential of India. Rather, I feel pity that agriculture is growing at 3 times the growth rate in manufacturing, whereas we are doing so much for manufacturing. So I think some of the problem of manufacturing sector are getting addressed, and I see big scope of revival of moderate to high growth in manufacturing sector. And with agriculture, we just see that growth rate will be somewhere around 3.5%. Services sector, which is quite large, also showing a very promising growth. So overall, I feel that we are likely to have a real growth rate of more than 6.5%, and indication that inflation is also decelerating. So this nominal growth rate of more than 10% is quite attainable.
And Mr. Ananth, do you buy this argument? Do you think that 10.5% also the tax collection also is growth is pegged at 10.5? So what's your sense on that?
You know, making forecasts is always a difficult task, but I have a feeling this time the government has given itself some elbow room in the manner in which they have pegged the forecast, and which I find is actually quite reassuring, because this budget is implicitly assuming 6.5% real growth and about 4% inflation. Now, the downside risks are that growth target may not achieve 6.5, you may come to 6. But if you look at parallelly inflation projections, 4 is a very ambitious projection
Yes.
for the whole year. The chances are, given the global scenario right now and the way commodity prices are functioning, we are likely to probably end the year maybe around 5 or just a little below
Yes.
5, which means my sense is that actually the government has kept itself a little cushion of the nominal growth rate could be anywhere between 11 to 11.5%, depending. That cushion will be what will allow them to meet the fiscal deficit target, because they invariably have a challenge in trying to manage the expenditure, particularly given that there are election year. There are also all the global uncertainties of the past have not gone away. So that cushion is then being maintained by them.
Shoma, do you agree with that thesis that there is the cushion because 6.5 and 4 is definitely on the conservative side?
No, I agree with the fact that 10.5% is an conservative estimate, sir, because we are assuming a tax parency of 1 when it was 1.5 in the last 3 years.
Right.
Specifically, the GST tax parency is more than 1.5,
Right.
given the compliance measures. But having said that, I think I just want to play and just add one important point over here. I think inflation has been a monster for the global economy, Indian economy to some extent for the last year. But the good thing is that inflation is going to correct very soon, and it has been correcting. So we could actually have a series of positive surprises on the inflation in the next couple of months. In fact, the way the commodity prices have been moving, oil, the WPI has indicated there could be possibly that WPI turns negative in the next 2-3 months because of whatever reasons. If that is the scenario, we are looking into some comfortable inflation projections. I think that which I mentioned at the beginning. So that means that 4% deflator which you are working with, there could be some adjustment on that. So a positive spillover of that the inflation could be on the growth. So it's good to go with a growth target of 6 to 6.8. So that's why I'm a little confident on the growth, because I think the factors working, which has worked against in the last 1 year inflation, that factors are not going to be present this time.
Vicky, are you as optimistic as Shomo?
Well, sort of, in the sense that I don't see. I mean, I just to press a point that everyone is making. I mean, especially TCA, who said that the government has created a lot of headroom and buffer for itself. I don't really see nominal GDP growth, given various combinations of growth and inflation going significantly below 10.5%. That being said, also echoing TCA, there are, your expenditure, particularly the revenue expenditure targets, might overshoot. We've allocated much less to Manrega.
Yes.
What happens if there's a bad monsoon?
Yes.
There are a couple of other things. What happens if food prices go up and the government is already close to the minimum buffer stocking norms and it has to procure from the open market? So there are problems. I mean, there could be sort of these contingent expenditure overruns. but you're kind of sort of buffered against that by having a potential upside to what I think is a floor of 10.5%. So I'm kind of optimistic in that sense. I'm more than optimistic. I'm very comfortable with the idea that the government didn't sort of build in 13 or 14%,
Yeah.
which was the case, if you remember, just a few years ago.
Yeah, that's true. Mr. Chand, I think you spoke of manufacturing and ease of doing business, in particular manufacturing, and you have the hope that the budget will make a push towards that. We haven't heard too much on PLI in this budget, given the fact that it is one of the showpiece initiatives of this government. What is your sense? Why was that not done, or is the budget not the only time to do it?
For specific sector, there is announcement on PLI also.
Yeah.
For instance, if you look at food processing sector, there is increase of more than 50% of PLI for food sector. So I think PLI is now looked at more in terms of targeted approach, that where we can get best result from giving production linked incentive. So that is, but I would say that PLI is not the only instrument or incentive to boost or attain particular level of growth.
So what
Just
you're
if you agree, I think we should expand the scope of discussion on this budget, which is related to growth. That growth is one aspect, but this government is giving lot of emphasis inclusive growth and also to sustainability aspects, because we have commitments. It's not that we will keep polluting our environment, we will keep damaging our natural resources. So those are the other aspects also. So
of course.
I think if government allocate resources, some of which is for sustainability and inclusiveness, maybe growth rate can be pushed much faster and much easier. But for the balanced development of the country, the approach of this government has been the growth which is inclusive and the growth which is sustainable. So those two dimensions of growth we should not forget.
Points well taken, absolutely. Mr. Ananth, the fiscal deficit glide path, she has again reiterated this year, the finance minister has. What is your sense of the fiscal deficit glide path, and whether that is indeed achievable as the minister has promised?
I think I already implied that is assuming that there is no new external shocks, which given the history of the last 2 years is itself a fairly big assumption to make. I think the glide path is achievable simply because the government has in fact built itself a fair amount of cushion, both in the projections which it is making for inflation, and secondly, their revenue collection, as Shoma had been pointing out, has been extremely buoyant. And there is a chance that buoyancy is increasing because there is something else which is happening, and this is the consequence of policies which have been taken over the last 5 years. There's been a much greater shift towards formalization. If you think in terms of the sectors which are now paying tax thanks to the way GST is being applied. So my sense is the fiscal targets are achievable, at least at the central level.
At the central level, achievable. Now, Shoma, let's come to the tax slabs. Now, that is one of the biggest discussion points and takeaways of this budget. How do you see that, the old versus new, that whole debate which is now currently playing?
See, before I start this debate, on a lighter note, being a taxpayer, I mean, everybody would want to enjoy a period of concessions. So that's fair. And in a country where savings is encouraged through incentives, so that has been the motto. But let me point out some of the advantages of a new tax regime. I think it's a work in transition. The idea of the government has to look into a GST revenue collection consistent with 1.5 trillion. They are almost there, and try to see how that benefits could be also passed on to the directors, basically regime. So in that point of view, I think one of the advantages, or in economic parlance, if you ask me, is that for the new tax regime is that I think the only difference from the old tax regimes, for example, you were saving 1.5 lakhs, you used to had to pay you did not have to pay a tax of 50,000. But your corpus of money which you were supposed to get after it matures, for example, if you are invested in the Shukarna Samriddhi scheme, that you will get protected, and the interest also, basically the interest also was protected. In the new tax regime, that 50,000 tax you have to pay because you are not getting 1.5 lakhs, but your overall corpus and the interest exemption will still continue to hold. So therefore, I think there is a distinction between long-term savings and short-term savings. So you are actually, the government is trying to basically, in terms of the, economic theory, you are trying to give a nudge to the taxpayer to incentivize the savings in terms of a short-term priority and a long-term priority. I think this is a concept which will take time, because we had an incentive-based tax structure over a significant period of time. That was fine, but now given the fact that we are moving into a regime whereby you want the person to make a distinction between short-term and long-term tax, long-term saving objectives, I think this is a fair assumption to make over a point of time. I think the new tax regime could be the default one, as the government has said in the budget.
Abheek, you think it will, there will be an immediate movement to the new tax regime, or it will take time? Because then we come to the whole idea of revenue foregone, and that again, if that does not happen, may be a cushion for further investments and push for growth for the government.
No, I think it will take a while. It is now the default regime for new entrants to the tax system. It will take a while, but I completely agree with Shomo that I think the kind of concerns that have been expressed about it dampening savings, yes, it will have some kind of effects in the short term, especially when in a situation where household savings have dipped quite a bit. It might have, but I think the long-term payoff from having a cleaner and less messy tax system, or any sort of economic system which is transparent and free from these various kings, and is unambiguously positive from what history has shown us. So I would tend to kind of think that there could be some short-term niggles. I'm a little concerned about the savings bit, because that is a bit of a problem. But I think the long term there would be a positive payoff.
How long do you think the old scheme will survive?
These legacy systems take a while to, and for salary taxpayers there are various things, and we are so attuned to think in terms of
tax
savings instruments, etc. So a conscious, to express a choice for the new regime will take a lot of nudging, if not pushing, by the government. But I just want to come back to what Professor Chand was saying, is that, we tend to talk about the quality of the budget, and because of this strange capital fetish that we have developed, we always look at the revenue to capital expenditure ratio and say that a good budget is one that has more capital to revenue expenditure, and hence. But I think what he is raising is that, you have so many other dimensions.
That's right.
To kind of assess and comment on the quality of a budget. And I think in this budget, these elements, these parameters become that much more critical, because a lot has been done. Well, it's been done for a while, but quite a bit more has been done for things like inclusion, and particularly the green initiative, which I think will get ramped up. So I think the way of judging a budget should move away from growth and capital expenditure to a degree, and look at these other facets as well.
And particularly given the fact that the government is insisting on the fact that it's a budget for Amrit Kal, so it's a longer
And the net
period.
zero target.
And the net zero target, of course. So that's point well taken. Well, on coming back to the tax new versus old discussion, as the government's think tank, what is your sense, Professor Chand, on what this will lead to, and are the sort of, is it a move? A rapid move towards a such situation where there is no exemption at all, and you're just pushing people to the new regime?
In fact, tax is not my area. I am member agriculture in Niti Aayog. Looks at agriculture, food, environment, climate, employment, and those kind of things. But only one point I would like to make in relation to tax, that we have this age-old and chronic problem of expanding the base of taxpayers, and also checking the concealment of tax. So I think if we are able to do something here in these two, that expand the ways and to put some check on tax evasion, then whatever little relief is given through higher income tax limits, that can be more than compensated by those two measures.
Mr. Ananth, do you think this is the end of ATC as we know it? I mean, the whole move towards, in discouraging exemption, tax saving, and moving towards an exemption-free regime?
I'm not sure. I think this budget has given some incentives for a slightly larger class to shift to the new regime, but I don't think that will be very dramatic at the moment. In large part because there are many, they have addressed one of the exemptions which was a sticking point, which was the standard deduction. A second one, which is still, in my judgment, pending, is the issue of tax deduction for rent. Because there is in the salaried class, those who are living in rented accommodation, which is not a small amount, this becomes a big consideration, and there's still a huge potential saving. So, whether it'll be whether this will sign the death knell of ATC or not, in part depends upon this.
True.
There is a second problem. I think it is important to emphasize this. Government has done a lot of good, but there is one area where there is still a huge challenge to overcome. Like when we bought in the GST, we created a uniform tax regime encompassing state and center, and it required a constitutional change, and it required a change in mindset, which has made a huge difference to our tax buoyancy. If we wish to do the same in direct taxes, we will have to bell the cat about agricultural taxation. Until we do that, and I know this is something which governments will find it very difficult to speak about, but it is something which civil society has to take up and make a case for, that you cannot have one huge loophole sitting in the direct tax system and ask for an exemption-free uniform direct tax system, because until you address this loophole, none of the other policies are going to work.
And there I lob it to the Niti Aayog representative on the panel. What is your response to this agriculture tax discussion?
One very good defense is that to tax agriculture comes under is a state subject. So states can do that, but I think it is equally difficult for state as it is for the center. We need to develop some sort of consensus on it. We know that within agriculture there are large farmer, big farmer, whose income is many times more than even a middle class household who is paying tax. So we need to evolve some consensus on this, that 85% of our farmers are small, so they should not be unnecessarily burdened or bothered with these tax things. But we also have very large farmers, and we see from their consumption
That's right.
expenditure what kind of consumer goods,
Absolutely.
luxury goods they are spending upon, what kind of houses they have. So I feel that within agriculture there is a group, though it is very small, who need to pay and who can afford to pay, and they
That's
may
right.
be even willing to pay. So we need to develop some consensus on it, but we should not unnecessarily bother 85-90% of our farmers who are marginal and small.
We have two leading bank economists on the panel, and the Reserve Bank MPC is begun its meetings today. Shomo, what is your sense of what given the budget, the FOMC meeting, and the fallout of that, what do you think are the options before the Reserve Bank in terms of rates?
No, I think the as we are discussing earlier, it's an uncertain world, and the good thing is that inflation is now becoming less of a problem globally. US Fed have raised the rates lower. Maybe that gives an indication that the pace of rate hikes could be lower. It's a very difficult task in front of the Reserve Bank also. But my sense is that I think we are almost towards the end of the rate hike cycle, even in India, and maybe we may be in period for a prolonged pause, because the next couple of months inflation numbers are possibly going to surprise us. And the way I think inflation has behaved after reaching a peak of 7.8% last April, then declining continuously, surprising the markets on the downside. So I think we are towards the end of the rate hike cycle.
Abheek, do you see a 25 bips or do you think that this will be the beginning of the pause?
I do tend to agree with Shomo that this is possibly going to be the last rate hike and possibly a pause. But I think the RBI should watch out for inflation building up again, because what has happened with commodity prices, for instance, is that
Exactly.
they've started turning up again. You just look at copper or steel and so forth. The other thing I seriously believe about inflation targeting is that when inflation numbers are coming down, you shouldn't just look at the headline inflation number. You should bother about what has brought it down, and in this case, largely vegetable prices. And you should have an underlying macro narrative that the central bank can provide. That look, this has happened, which for the Fed, for instance, was saying that wage in growth has slowed down. The labor market, which is completely went for a toss with some of the employment numbers that came out on Friday. But that said, I don't think we have a macro narrative which the RBI can convincingly give us to say that it has conquered inflation, or at least it's sort of won half the battle against inflation. Core inflation is still high. Services inflation is still high, very sticky. So in the absence of that, yes, maybe they can stop and wait for the past actions to sort of seep through and have some kind of an impact. But there is absolutely no scope for the RBI to signal that this is kind of the end and you can take it easy. And just see what has happened in the US markets, where the markets are now playing, as I said, a game of chicken with the Fed, because the Fed just, softened its stance a little, and then the markets kind of pounced on it. Let's not have that, because that, the entire story could turn.
Sure. Yes, sure.
I just want to add one point about how uncertain. When you look into the Fed's language, first when it said the inflation came, it said it is transitory. Then it said it's temporary. Then it said it's longer than temporary. Then it said it is narrowly focused. Then it said it's broadly focused. Now they are saying narrowly focused. So you can understand how uncertain in the world. The good thing is that our central bank has been consistently it has been playing on the front foot in terms of raising the rates earlier, and I think that possibly will play out in good state in this current fiscal year.
Do you see a change of stance from the RBI in terms of moving to a neutral stance, just to announce that probably not under control, but inflation is sort of being kept a watch on and is under check somewhat?
No, I agree with you. I think they will not change the stance because they just don't want to they give away to the market that we are through. Whatever is the decision, I think they will make the stance that they're still committed in bringing down inflation in a consistent manner. So I don't think the time has now come to give away the stance immediately to the market.
But Abheek, the government, the budget would have helped and eased some of the pressures of the governor, you think, in terms of the fiscal consolidation and remaining on the fiscal prudent path?
Yes, to that extent, he can perhaps, breathe a little easy. But, there are so many other challenges ahead. It's not just earlier, it used to be the sort of the fiscal dominance, which was a problem for monetary policy. I mean, that has reduced, but there are so many other problems and risks on the horizon that the RBI has to watch out for. And I think China, the move away from the zero COVID thing has been such a big sort of game changer,
Yes.
whatever. And let's see how that sort of affects things, both in terms of growth and global inflation.
So coming back, closing comments, Mr. Ananth, on the budget, coming back to the budget overall and what it does, and to take Mr. Chand's point about structural reform for the future, not just about revenue and expenditure numbers.
I think that is probably the one area where, if this budget has struck a number of points on which I think one can look forward to the future. They've talked about issues relating to R&D, about the green economy and all of that. I think what the budget has done in its signaling side has laid out a vision for many policies which you expect to see will get fleshed out as the year and years to come in the future.
So on that note, thank you very much, gentlemen, for an absolutely engaging and interesting session. Thank you. And